Good afternoon, everyone. Welcome to today's webinar, PTA Market Outlook and the Industrial Chain. This webinar is jointly hosted by Straits Financial and Zhengzhou Commodities Exchange. I'm Meng Na, and I'll be your moderator today. First, disclaimer of the event. Trading in futures entails significant risk, and presentations in this event should not be considered as trading recommendation. First, a brief introduction of Straits Financial to the audience who are new to the channel. Straits Financial Group is a financial brokerage house that provides access to commodities, exchange-traded OTC, Forex, and the financial derivatives markets for all your trading needs. You are supported by an experienced dealing team 24/5 based out from Singapore and inter-dealer brokerage services for trade execution. We also offer OTC structured products to meet the unique and sophisticated requirements of each client. Headquartered in Singapore, we have a strong presence and understanding of the Asian markets. And with offices in the United States, China, Indonesia, and Dubai, we bring forth access to global markets. Please do not hesitate to contact us by the information provided here if you have any inquiries. Okay, our webinar today is about PTA Market Outlook and Industrial Chain. Here is the agenda. We will hear 5 industry experts share their perspectives on PTA Market Outlook, Industrial Chain, product updates from Zhengzhou Commodities Exchange, and trading strategies, as well as examples of price protection on PTA. At the end of the webinar, there will be a Q&A session. Okay, now please allow me to introduce our guests today. Our first speaker is Mr. Hou Zhenhai, Chief Strategist at Straits Financial China. Mr. Hou has more than 20 years of commodity industry experience of the China market. He started his career at GKN Group in China and then served at Wisconsin Foundation after obtained the MBA degree. He served 6 years at CICC as the leader of Overseas Strategy Team and A-Share Strategy Team. Mr. Hou and his team was honored the top team for the New Fortune Sell-Side Strategy Research in 2008 and the top team for the Asia Money China Strategy Research in Hong Kong in 2009 and 2012. Welcome, Mr. Hou, for joining the panel today. Our next guest is Salman Lee. Salman is the head of polyester at Wood Mackenzie. He leads Wood Mackenzie chemicals research into the polyester chain, focusing on the synergy between the raw materials and the downstream products, including fibers, and bottle and film-grade PET resins. While watching broadly the whole polyester chain, from paraxylene to downstream sectors, Salman maintains a strong interest in the PTA and MEG markets of the Chinese-speaking world, which he believes forms the core of this chain. Thank you, Salman, for joining us today. Next, let's welcome Kurt Wang Bi from Zhengzhou Commodities Exchange. Kurt is the manager of Zhengzhou Commodities Exchange based in Singapore, focusing on the marketing of ZCE's internationalized products, exploring cooperation opportunities, and researching the commodity market in SEA. Prior to joining the Singapore team, Kurt was involved in the research and development of ZCE's white sugar and cotton options. Today, we will also have 2 in-house speakers from Straits Financial Singapore, James and Zach. James is the VP at Straits Financial. He comes with 16 years of experience in the commodity market. Before joining Straits Financial, he worked for a variety of financial institutions, most notably Hong Kong Exchange, LME, Societe Generale, Mizuho Corporate Bank, and CICC. His working experience includes being a marketing rep with Hong Kong Exchange, marketer with investment banks focusing on commodity derivative sales in Great China. He has also been a business development manager in charge of China market for several well-known FCMs in Singapore. Welcome, James, to the panel today. Our next speaker is Zach Singh. Zach has 5 years of experience in the Chinese market and now is our regional manager covering China and also part of our Asian structured products team. Prior to joining Straits Financial, Zach has led teams within asset management and commodity trade financing sectors, covering both China and Singapore markets. Thank you and welcome all our speakers for joining us today. Now, without further ado, let's welcome our first speaker, Mr. Hou Zhenhai, to give us a talk on macro and PTA market outlook. Welcome, Mr. Hou. Can you try to share screen?
Thank you. Okay, I'll share my screen now. Just a moment. Okay, can you see the screen on it?
Yes, we can see.
Okay, so let's start. Okay, good afternoon, everyone. So this is a pleasure to introduce our view of the global and the China macro outlooks and about the PTA market. First, we will start from the global macro outlook, especially in the United States, because I think for PTA, most of the demand side actually focus just on two countries. First is the US and the second is China. So we start from the global outlook. In the US, we think that the US household disposable income growth has already slowed down after the fiscal stimulus program has finished since this August. So we already see that the income growth slowed down quite a lot in the following months. But the household expenditures growth has not slowed down because we think that these are two reasons. First is that the pandemic of COVID-19 has gradually finished, so people has actually come out of their homes, and there was more expenditures were expected. And the second reason is that also I think is a more important reason is that U.S. household now are running a very high household saving. Especially look at this chart, you find most of the saving growth has actually come from the checking account and the cash. Why we so focused on this number of the household savings in checking account and the cash? Because we think most of those money actually belongs to the low-income families. We know there's several, actually 3 rounds of big fiscal stimuluses were given over the past 2 years after the outbreak of the COVID-19. And this money actually now become a big increase in the household savings in especially I think in the middle to lower income people. And they will continue to spend those money, I think, in the future months to support their expenditures. So I think that's why we still relatively positive over the U.S. household expenditures over the next 2 or 3 quarters. I mean, the first 2 or 3 quarters of next year. Because we see that the total number of these checking accounts and the cash savings actually be higher by over 2.3 trillion USD compared to the same level before the COVID-19. So I think that's provide a big room for the US, especially the consumer spending to keep its growth over the next few quarters. But these also a concern that we may need to look on because that the good news is US households can still maintain their spending power, as I mentioned just now. But there's also a bad news. The bad news is that the inflation may not go down too much before that. So we already see that the U.S. CPI inflation has been much higher. It's over 6%, close to 7%, actually a highest level ever in 40 years. So I think this inflation must also be a great drag on the consumer spending power because the price level goes up too much. And there will be also that we see after the fiscal stimulus ended in August, the disposable income growth of the US households actually slows down from the peak. The peak is set in the middle of this year, which is around over 10%. Now that number is down to 5.38%, as you see in the chart in the blue line. And also, this is actually the first time we see since 2016 that we see a household income growth lower than the inflation readings. And I think that gap may get wider in the first half of next year, which means that the inflation could still remain high and that the income growth actually goes down. That will actually put a downward pressure, and also that make a lot of U.S. consumer feel unhappy about that because their income growth cannot keep up with the inflation anymore. So that's also may change the policy stance of U.S. government as well as the Federal Reserve. So we think that's a more possibility that the Fed will begin to foster its pace of taper, and all even that choose to hike the interest rate well before the current market believes. So that's also put some downside risks to the demand side of the U.S. consumers in the next year. But I think that mostly likely to happen in the second half of next year. In the first half, we're still relatively positive over that, but there could be some changes or some unexpected slowdowns, I think, in the second half. But from another side, we also see that the U.S. consumer spending actually grow mostly by commodities and durable goods in the past 2 years. This index, as I listed here, is the volume index. It's excluding the price factor. So it's basically most driven by the durable goods and the commodities. But now we see the change, the shift has happened because after the food ban was lifted in the United States and the more people come out of their home and go to office, then the service consumption actually picked up in the past quarters. And I think that will continue to grow in the next year in the services. But the commodity and the durable goods, I think, already reached its peak in the volume right now, and we're likely to go further down in the next year. So, I mean, even the U.S. consumption is relatively okay, but I think that the goods side, the durable goods side, will come under pressure. Because we look at the chart, you will see that service are 65% of U.S. total consumptions, and these consumptions actually are much larger than the commodities and the durable goods. So I think the inflation could still remain high in the United States, but their consumption power over the durable goods and the commodities could gradually slow down, I think, in the next year. So in 2022. So okay. So let's if we look at this short-term chart of this U.S. freight chart, I mean, the freights on the Pacific, it's actually from China to U.S. ports. These freight actually go down quite a lot since October. And I think this year, as the U.S. demand is very high and China is also saw a very high growth of their exports, which is around 30% year-on-year growth in China exports. Next year, we might not see that much. In my view, I think the Chinese exports will slow down quite significantly next year, maybe down to low single-digit growth next year. So this also should be a consider the factor into a lot of commodities, especially these commodities that more like to has a higher percentage of export exposures. So, okay, that's my general view of the global macro, and we were more then we can shift to our view of the Chinese macro outlooks. First, as many of us has focused and pay a great attention is the Chinese home property sectors. The home sales and the new home starts in the past few months is actually down very, very quickly, and it's down over 20% year on year after July. And this give a great pressure over Chinese macro and the economic growth, as well as these policymakers over the past few months. So we already see that last weekend that we have a high-ranked economic meeting in the top leaders to set the policy for the next year. There are some policy changes already made to stabilize the economic growth and also stabilize the property sector, I think, in the meeting. But I do not think that all these pressures will be big enough or large enough to reverse these downturn. It could stabilize it, but I don't think it can reverse this downturn. Because this downturn is not mostly or largely because of the policies. Most of this downturn actually comes from, I think, natural causes of these long-term factors, such as demographics and also the household debt ratios. This is a chart I used to explain a little bit for you, because you look at this chart, you can see after the July, all cities faces a downturn in their sales. Actually, the downturn is much larger in the third-tier cities than in the first and the second-tier cities. And also after the recent policy adjustment in our mortgage policies, in our loan like developer loan policies, we think there are some changes, also some improvements happened in the first tier and second tier cities. But for the third and the lower cities, we don't see much improvement. It's actually still down like 30 to 40% year on year in their sales. Why there's such clear difference between these top tier cities and the lower tier cities? I think that this can be explained by mostly by Chinese demographics and some long-term factors. This is a chart. The blue line is for Chinese yearly new births. You can see clearly from this chart that after 2017, Chinese annual new births down greatly. It's down from 17 million roughly, now down to 10 million. So in just about 3 or 4 years, we have lost nearly half of our annual new births. Also, you see in the line, this is a big. Also, there's a red line. This one is our annual new deaths. So theoretically, we will see that in 2021, with this year, that we have a new birth rate lower than the new deaths in China, which means that the whole population in China has already peaked. So that's a big factor, I think, can explain the recent weakness of Chinese not only property sales, but also these domestic consumption growth. The demographic changes has play a very large role over the recent years' weakness in China's domestic economic demand growth. Also, we can see in the left side, the circle on the left side is the retirement of Chinese baby boomers. I call the Chinese baby boomers because they are people born between 1962 to 1974. That 12 years, because that's the largest number of people that have born in the past 40 years. Over those 12 years, on average, there's 28 million people born annually. So these people, since that China policy means that when you have for women that you can get retired at the age of 55, and for men that is 60 years. So if you are a person born in 1962, it means that you get retired next year. So we say we are reaching a tipping point that we see huge amount of people will get retired since next year, and that trend will continue for another 12 years, over roughly over 300 million people. 300 million people were retired in the next 12 years in China. But if you look at the yellow circle in the middle, that's the people we're likely to get into working age. That number would be down from 20 million in 1998 for the people born in 1998, then down to roughly 60 million in 2003, and for people born in 2003, and that trend will continue. So you make a simple calculation that we get 28 million people retired a year, and new young people who getting entered the working age is only merely 16 million. That we lost the working age people about 12 million a year over the next 12 years. So that will be a big important factor. Not only I think will affect the Chinese macro outlooks, but also like will have a great impact over the global macro, I think, because China, we know that over the past 20 to 30 years, China is the biggest global working power to provide all these goods and some commodities, physical goods for not only for China, but also for the global consumers. So that could be a big change in the global macros when the Chinese demographics has such a great change over the next 10 years. So after that, we will see that the Chinese property investment as well as the infrastructure investment all get into negative numbers. The only sector see a positive growth this year is manufacturing. But if you look at the segments in the manufacturing investments, you find actually only two sectors driving this growth. The first sector is the export related manufacturing sectors, which means that most of people are working for exports. this year. They see a growth in the fixed asset investments in the manufacturing. The second sector is the so-called new energy investment, including these we know the new energy like wind energy, all these kind of stuff. So excluding these two sectors, we don't see much growth. But next year, as I mentioned before, I think the Chinese exports may slow down quite significantly. So we think that the manufacturing sector, which related to the export growth, will see a slowdown next year. So that's why we think that the government, I mean the Chinese policymakers, are actually worried about next year's growth, because if they don't do anything, that the property could go further down, and the manufacturing this year will also go down. And that's what means that we could be hard to reach a GDP growth target between like 5.5 or 6% next year. So that would be hard to do it. If we look at the Chinese real GDP growth in 2020, because of the pandemic, we only have a 2.3% growth. But this year we are roughly have 8% growth in our calculation. Chinese GDP growth in 2021 will be close to 8%. But you average those 2 years, the annualized growth only about 5.5. So next year, I think 5.5 is already a hard target to reach if the government don't do anything. So more realistically, I think we don't think that the Chinese government may set a next year's growth target much higher than 5.5%. In my view, I think if we can reach 5.5 next year, it's a great success. It's not a low target. It's a hard target to reach. So under this context, I would see that the challenge in China that is next year could be much bigger than this year, because we may not enjoy a high exports or high trading surplus as we see this year. So we need a more accommodative domestic macro policies if they want to reach a 5.5 growth next year. So this is our general view over the policies, but I think to reach that target is not an easy job for the government, also for Chinese as a whole, because China still have a downtrend over these natural forces, over like demographics and the high household debt ratios. So we see this chart that mostly Chinese domestic passenger turnover growth is slowing down right now, but also the cargo growth, also domestic cargo growth turnover also go down. Exports is quite good, but the domestic cargo turnover actually goes down. This is largely also hurt by these COVID-19 control policies in domestic China, because we still have some sporadic new cases, new infections happen in China, and we close down these cities and part of the cities accordingly. So that hurt the people's ability to go out and to travel, and this was also hurt Chinese consumptions over the past 2 years. So I think not only these policies, just like we see already seen these months of like cutting triple R's. I think that's not enough. That's not enough. We probably will need more, and more likely we will see the rate cuts by PBOC of MLF or LPR rate in 2022. You look at this chart, you will see that the last rate cuts in China is actually when the pandemic at its peak in China. I mean, the first quarter of 2020. So after that, these rates have not been further cut. But I think next year it's more likely the PBOC will further lower these interest rates, in my view. Otherwise, I don't think the policy will be enough to stabilize the growth as the policy maker now mentioned. For the PTA market, I would say that it's highly correlated with the Chinese consumptions, but including these like apparels, these things. But I think the whole demand is not pick up very quickly. But the PTA production capacity is still continue to grow. In 2022, we projected that production will continue to grow around 8%, and will be slightly higher than the demand growth. The demand growth is, I think, we're close to the GDP growth, which is about 6%. But now Chinese domestic PTA profitability are under great pressure. So we see the utilization rates is already very low. So the good news is that the stockpile storage would not be very high, but it's also that means that the price of the PTA will not go much higher. If it go higher, then more capacity will be opened, and when the utilization picked up, just like what we saw in the past 2 months, then the price will slump. The PTA price will also, because the demand cannot keep up with such high utilization rates. So right now the utilization goes down further, and if it stabilizes around 70 to 75% in China, I think the price can stabilize there. But I don't see much upside for the price to move. Okay, that's my presentation. Oh, thank you very much. Hello.
Thank you,
Okay,
Mr.
I finished.
Ho. Thank you. Thank you for sharing your perspective on macro and PTA market. For audience who have any questions, please message us in the chat box. We will address your questions at the end Q&A session. Then let's welcome Mr. Selman Lee to further talk about PTA industrial chain and market outlook. Selman?
Thank you. Can Mr. Ho stop sharing?
Okay.
Mr. Ho,
just a moment. Yeah, I will find my way to stop it. Okay.
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 Someone, can you try to share screen?
Can you see?
Yes, can see.
Okay. Okay, thank you very much for inviting me here today. I'm here to share with you very briefly our views, Wood Mackenzie's views, and my personal views on the markets, on the whole chain, And we always talk about the chain, the polyester chain as a whole, because while we are talking about the PTA as a commodity today, it actually forms a broader chain with the raw material, the main one being paraxylene, and the derivative products, that means polyester products like the fibers and PET resins, how they interact with each other, and other factors that come in to influence how the markets react. So we will start from I'll just share very briefly, although Mr. Ho has already gone into detail on how he views the global economic picture as well as the main market Chinese economic picture. But I'll also start from, we will start from the most downstream of the sectors and see how consumption is acting and how eventually the demand and supply balances or lack of is affecting the trends in the markets, right? In-house, our view is that this global economy is actually picking up from the doldrums of 2020. In 2021, it is uneven, especially in the second half of the year, with the onset of return of some lockdowns in some key markets like the US and in some European markets, and then now maybe to some extent the Chinese market. But by and large, 2021 has been a much better year compared to 2020. And we are positive that as we go into the next few years, Asia, led by China, will likely be the strong powerhouse leading the economic revival. So with this backdrop in mind, we can see that consumption itself is actually growing well. As we all know, whether you consume polyester products like PET resins, which goes into your bottles, which goes into your packaging, and fibers, which a lot of it goes into our garments, in textile products, but also into our shoes, into umbrellas, into curtains, into household products like our bed sheets and our pillowcases. This demand is actually highly influenced by the economic well-being of the country. And globally, we do see, because we are seeing a relatively positive picture from this year onwards, and as we go on in 2022, barring some of the headwinds that we may see. In terms of consumption, the long-term picture is actually a rosy one. And we do see that global production, polyester production, in order to meet the consumption, mainly into fibers, but not only into fibers, mainly into fibers, is that it is likely to grow. The biggest story in terms of volumes and in terms of growth rate, perhaps is China, and but there are other growth areas in other parts of the world, like Turkey, like Vietnam, and even India and the United States, which should see actually relatively robust growth as we proceed on in the next few years. So the recovery after the pandemic, as we put the pandemic behind us, the virus may unlikely go away totally. But as we live with the virus, as we learn to continue our economic activities in the new world, in the new normal, the likelihood is that we will see that the world is going towards a 2% plus polyester growth rate in the next few years, into the next decade. And that is positive because that is essentially in line with GDP growth and population growth, barring any unexpected headwinds like war, which I will talk about later. But at the same time, there are a lot of challenges that come this way. We have seen that I've explained to you briefly about how consumption is likely to be robust and how polyester production is likely to be high and accelerating in order to meet the consumption. But further upstream of the chain into the raw materials part, we do see that PTA as the main raw material for the production of polyesters and the main raw material for the production of PTA, paraxylene, both of them are actually going into serious overcapacity. And with overcapacity, if we were to assume a relatively normal utilization rates, operating rates of all the assets in the world of approximately 80+% in a year, the likelihood is it will result in oversupply, which means that all the supply being churned out can more than satisfy the demand, can more than satisfy the polyester production that we are seeing. And it will cause a lot of margin squeeze. It will cause a lot for prices to be, it will cap any price gains, any attempts to push up prices higher. And added to this issue, this problem is that the secondary polyester raw material, MEG, is also going into serious oversupply, overcapacity, which will likely go into oversupply. So what we are seeing is that even though polyesters in the next 10 years will likely grow, even if consumption of textile products, of PET and packaging in our daily lives will likely grow in the next 10 years, the likelihood is that the prices of all these raw materials may not be shooting up very high, and in fact, they may plod along, be very sluggish. And the margins are likely to be squeezed up to a level of losses. And we are already seeing that now. So this is something that we have to accept. And there is no real solution to this because of you can blame it on the folly of men, is that because of the really positive margins, because of the profitability that we saw in paraxylene previously, we saw in MEG previously, there has been a lot of additions of investments of new capacities, new assets into this market. And that is causing the overcapacity that we're seeing now, which may worsen in the next few years, unless you cancel projects. Our view is that projects are unlikely to be cancelled. And in fact, the supply of paraxylene, the main raw material for the production of PTA, is also likely to increase not only from new assets coming on stream, but also on the fact that the world, all of us, and key economies like the US, like the European Union, like China, like India, actually moving towards an energy transition phase as we try to maintain the sustainability story. If the consumption of fossil fuels, and in this case crude oil, is likely going to decline into the very into the very far future, the possibility is that aromatics production, the possibility is that refiners will find that it is more meaningful to channel the product slate to produce more petrochemicals, and hence C6, 7, and 8, the aromatic slate of which paraxylene is the main product. So we do see that energy transition is also likely to push the supply of PX, the availability of PX more into the market. And you will notice that there are some markets that can absorb all this extra PX. It may not be able to absorb a lot more. China on its own is the single most important PX importing country, but it is also putting up a lot of assets, a lot of capacities, new capacities that might displace all these imports. So we may see a consolidation of capacities, of which they are being added now in the Middle East, in other parts of Asia, like that has been added in other parts of Asia, like Japan, Korea, and Southeast Asia. And this is going to change the equation and cause a further issue for paraxylene producers. And even for PTA producers, you will also notice that previously means approximately 10 years ago, China used to import a lot of PTA. But because China in the past 10 plus years has increased so much in terms of capacity built, it is essentially becoming a net exporter on its own. And the other countries that may be net short of PTA are not importing that much. So we are also seeing a trend for PTA where we are unlikely to see a very active international trade flow. And any extra of PTA capacities will have to be solved, will have to be mitigated by cutting back on utilization rates rather than exporting to other countries. So from the PX point of view, or the PTA point of view, this is likely to be the case. So there are some headwinds which, from from the market fundamentals point of view that I'm highlighting here, that may throw a spanner into the robust growth machine of the whole polyester chain, even if consumption is growing, even if production of polyesters are growing. There are other headwinds, for example, non-economic factors, war. What might happen if the Taiwan-China relations deteriorate further? What might happen if the Korean Peninsula becomes politically unstable? What might happen if there are other hotspots like Ukraine today, or even some parts of Africa and the Middle East flare up? What might happen if we have more dangerous variants of this virus that is now plaguing us and causing more economic disruptions? So these are other headwinds that are not in the market fundamentals, not in demand and supply per se, but they may also come and haunt us. But by and large, we do see, by concluding this sharing, is that we have gone out. We have actually put the very horrible 1 to 1.5 years behind us, from the whole world, for all of us in all various parts of the world. And China has very consciously put this past behind it since early 2021. So with growth in the post-pandemic world is likely to be positive, even if there are headwinds coming. While we might be very cautious about how the outlook may be, by and large, we do see prices rising, and hopefully we do see that producers are able to strike a balance in the utilization rates and maintain and keep a certain margin that is acceptable to themselves. Thank you.
Thank you, Mr. Lee, for your insightful outlook on PTA market. Again, Mr. Lee will address the questions at the end Q&A session. Now let's invite our next speaker, Kurt, to introduce PTA Futures fundamentals. You can see.
Okay, can you see the screen?
We can see your screen, Kurt.
Okay. Thanks, Mona, and thank the Straits Financial for hosting this webinar and give me this opportunity to share something about our exchange and also our products. So today my topic is about the this international product, the PTA Futures. Okay, for those who are not so familiar with our exchange, I would use some slide to talk about our exchange before. And after that, I will talk about some PTA's market and especially the future market. And after that, I will go over something about the contract specifications and also some basic rule for trading the PTA futures. Okay, Zhengzhou Commodities Exchange, or ZCE, was founded in October 1990, and it's regulated by China Security Regulatory Commission, or the CSRC. And ZCE provides the venue, facilities, and services for derivative trading, delivery, settlement, and risk control. Zhengzhou Commodities Exchange located at the Zhengzhou City, Henan Province, in the central part of China. You can see on the map It's in the central part. And Zhengzhou Commodities Exchange is also the only exchange in the Western and Central China. The picture on the right side is the future building, the DCE's headquarter office. And DCE also achieved some records in China's future market. We have some 6 firsts. And in 1990, DCE launched the first future market. DCE was the first future market in China, and it launched the first standardized forward contract in 1991, and also the first future trading rules in 1992. Also, DCE has provided the first electronic trading system in China's future market in 1993. And in 2017, DCE launched the first commodity option, the white sugar option, and also the first fresh fruit futures, the apple futures. Now DCE has 23 future products, including 14 agriculture futures and 9 non-agriculture futures. Also, DCE has 6 option products. Here are some pictures about these products. We can see that DCE has some wheat, rice, rapeseed oil, rapeseed meal, and cotton yarn, and white sugar. Also, DCE has some products not often seen in the global market, like the Chinese jujube, the peanut kernel, and also the fresh fruit apple. For the non-agricultural futures, DCE had the PTA and the polyester silver fiber, this pair in the PET industry, and also had the soda ash and the glass in the glass industry. And it has the thermal core for energy, and the ferrosilicon and silicon manganese in the steel production. And also it has the methanol and the urea, this pair in production. And DCE has achieved a very fast and huge development in the past 30 years. And we can see this map is the total trading volume by each year, and also the end of year open interest of DCE. And before 2006, the market share of DCE is quite low, because before that, this is 100% of the agricultural commodity exchange. And at the end of the 2006, DCE introduced the PTA Futures and got a great success. So after that, DCE introduced more and more non-agricultural products to its product list, and also it translates itself to a more diversified commodity exchange. So in 2020, DCE has the total trading volume of 1.7 billion contracts, and also has 8.5 million contracts at the end of the open interest. And this year, DCE moved forward. According to data from January to June in 2021, DCE has a total trading volume of 1.3 billion contracts. So this increased 112% in a year-on-year basis. And also the average open interest reached to 10 million, which increased 41% in a year-on-year basis. So with this result, DCE ranked number 7 in the global future exchange by the FIA. Okay, DCE also, the products and services also ensure that the company can effectively manage risk and achieve growth. Here are some examples about the future market. For now, about 90% of PTA production company and 85% of key sugar refining groups, and 80% of large and medium-sized cotton trading company, and also 50% of the coal power company ranking top 500 in China has participated into the DCE market. Okay, now let's move back to the PTA about topic today. PTA is a kind of the petrochemical product, and its full name is purified terephthalic acid, and it is a white crystalline commodity powder and also an important organic compound used as a precursor to the thermoplastic like PET. And this diagram shows the interchange about the PTA. It upstream is from crude oil to naphtha and MX and PX to PTA. And with PTA and MEG together, we can have the PET Also with the PET, we can have different kind of the downstream products like the polyester fiber, which can be used to make the clothes or the textile. And with PET, we can also have bottle grade chip, like the bottle we use drinking water, and also the thin film, which can be used in the packaging or pharmaceutical industry. The PTA spot market in China is, for now, China is currently the world's largest PTA producer, and more than 60% of the production capacity in this world is concentrated in China now. And according to the consumption of China in 2020, which is 45.68 million metric tons, and if we use the average price of this year, the market value of the PTA is about 170 billion Chinese yuan. And there are two diagrams show how the market in China developed. From right-hand side, we can see the China PTA's production and capacity. And past several years, the Chinese production and capacity increased a lot. And I know Mr. Xiaomeng Li has also mentioned that. And also on the right-hand side is the China PTA's import and export data. Because the production and capacity increased a lot since the 2013, we can see on the left. So the China's import drops a lot since 2013, which can be reflected on the right-hand side of the picture. So we can see the import to China, it drops a lot. And this diagram is the price and the trading volume of PTA futures of DCE. And we can regard it as a history of the PTA futures. Here are some time spot I think it was talking about. In 2006 December, the PTA future were released in DCE. And in 2012, the daily average trading volume reached 500,000. And in the March 2015, the open interest reached 1 million. And in the November 2018, the PTA future go internationalized to overseas investor. And in the December of 2019, PTA option were listed in CZCE. And last year in 2020, the open interest of PTA future reached to 3.85 million, the all-time high. And this year, on February, the one-day trading volume reached 5 million contracts, because one contract equivalent to 5 metric ton. So that record equivalent to 25 million metric tons of physical PTA products. Okay, we talk about the PTA future. We see it very important tool for the market, and we see it's not only due to its liquidity, but also PTA future has become the benchmark for pricing in the spot market. For now, approximately 8,000 industry clients and the financial investor has traded the PTA futures, and also the correlation between the PTA spot and future price is 0.99 in 2020, which is a very higher number for the price correlation. And we can see the diagram on the right-hand side, which the two price, they go the same direction. And also, according to our colleagues' research, now more and more the company in the spot market, they use the PTA futures price to do the contract pricing. They say that the company in the market use the PTA future price to set the spot market's daily price. And with that, they can have the spot market's monthly price, which is the benchmark price they can sign for signing the contract. And this is the performance of the PTA future in the past few years. Left-hand side is the volatility of PTA futures, and we can see that the volatility increased a lot since the 2017, because we know the COVID-19 hit the global market, and so there's a distortion on the market price. And also on the right-hand side is the PTA future price, and with the naphtha and the PX. we can see that they have the same direction, the same trades about the price. So a lot of company actually has used the PTA future as a tool to do the spread trading in this market with the NAFTA and the PX. Okay, now this is the overseas market information. PTA futures were officially introduced to overseas investors in November 30th, 2018. For now, there are more than 400 accounts opened by overseas clients, and these clients from 19 countries and regions like UK, Italy, Singapore, Malaysia, Australia, Korea, and so on. And these clients have contributed about 10% of the total trading volume each day. This is the PTA futures contract specification, and here's some points, and we're talking. The trading unit is 5 metric tons per lot, and the price quotation is the Chinese yuan, and the minimum price fluctuation is 2 Chinese yuan per metric ton. And also here's some daily price limit. The base limit is plus and minus 4%, and the minimum trading margin is 5% for contract value. The contract months is from January to December each year. And the trading hours, we have 2 sessions, the day trading session and the night trading session. The day trade session is from 9 a.m. to 11:30 a.m. and also 1:30 p.m. to 3 p.m. And the night session now is 9 p.m. to 11 p.m. All the time is in Beijing time. And also the delivery method is a physical delivery, and the code is TA. Here are some the rules about PTA futures. I divided into 4 parts: the account opening, trading, clearing, and delivery. I will go over some basic things. The first is the account opening. All the investors should pass the investor suitability, including the financial condition, the knowledge, and the trading experience, to prove that they have the ability to trade and they have the tolerance about the risk. And also the client need to choose a way to open the account. They can have the account at the overseas broker or have the account at the FE members onshore China. So we call this direct or indirect method. And secondly, the trading. The most 2 things is the price limit and the position limit. The price limit for the PTA future, the basic limit is plus and minus 4%. And the position limit looks like a little complicated. At first, it's huge, and the parameter is settled based on the total open interest of the market. And the basic logic is with the time to maturity, the position limit will reduce. We can see that at the delivery months, the limit will reduce to 5,000 for the investor. But both of the price limit and position limit may be changed according to the condition of the market. And third is the clearing. This acts at the role of the central counterparty or the CCP, so it will take on the counterparty risk. And the most useful mechanism is a pre-margin mechanism. So this will set the margin before the client can trade in the products. For now, let's see, the minimum trading margin PTA future is 5%. So the clients need to have enough money to trade for the contract. And also for the purpose of the risk control, the margin rates will increase with time to maturity. And also the currency of the settlement is in Chinese yuan, but also this provides a global investor with US dollar as the margin, but the US dollar will transfer to the Chinese yuan with the haircut. And for now, the haircut is 0.95. And also the global investor can choose the US dollar as the profit currency, which means if they have the surplus in their account, they can choose the surplus transformed to the US dollar, which could be done once in a month. The last part is about the delivery, and all the products in DC are physical delivery. So the buyer can apply the delivery at any day in the different months. For PTA, we now have 20 third-party warehouses and 4 factory warehouses and also 1 boundary warehouses. They all located in the east coast of China. We can see on this map. There are 2 in the north in Liaoning province, also 10 in Jiangsu, and 11 warehouses in Zhejiang, also 2 warehouses in Fujian. So GDP also provides some way to help the international buyer to have the receipt by the PTA products. The first one is all the boundary warehouse receipts will preferentially allocated to the offshore investor. And if this investor were matched with the duty paid receipts, we can introduce export services to assist exports of the duty paid products. And also, if the export doesn't work out, we can provide this is comprehensive business platform for this investor to sell off their duty paid warehouse receipts on this platform. And last is about the reference data, and this also have the reference data services on our website, which including the data like code, the tick size, the position link, price limit, margin, trading fee, and so on. Because this parameter may be changed day to day according to the condition of the market. So the newest data you can find out on the website. I just show the picture about where you can find them. On the left-hand side, the Chinese website, you can find the place. And on the right-hand side is about the English website. Okay, that's my presentation today, and thanks for watching. If you have more questions, you can email me or just ask Straits Financial. And I know they know a lot about our products and also our rules. And also, if you want to find more information, you can visit our website. Thank you.
Thank you, Kurt. Thank you for the comprehensive introduction of the CZCE and PTA product. And next, let's welcome James Wong to give us a talk on basic PTA futures trading strategy.
Hello, Lena, can you hear?
Yes, we can hear you.
Oh, okay. So today my topic is about the basic PTA futures trading strategy. So first, we're very happy to can have this webinar together with the exchange. Since Straits Financial, we actually for the PTA, this international product, we achieved the first trade together with our broker in China. And for the rest internationalization products, for example, like the DCE and also the IE, we also trading very actively in this market. So today I will talk about the PTA industry. First is when we look at the trading strategy, first we can see the PTA industry chain. So from the upstream is the crude oil, and led to the NATA. Also the next is the PX. Then we have the PTA. So for the crude oil, let's say between the crude oil and the PTA, the correlation is around 0.76 to 0.78. It means once the crude oil, the Brent crude oil, move $1, corresponding to the PTA will move about $38. So the trading strategy can be between the crude and the PTA. Then the raw material for the PTA is the PX. PX, the correlation between the PX and the PTA is 0.91. So it means the PX move $1, theoretically the PTA will move $5 per metric ton. So these are very basic the correlation and the price movement. between the product chain. So we can look at the next page. We know when we traders product not only on the outright, they also trade the spread. For example, here the crack spread between the crude oil and the naphtha and the PX naphtha. All these products, like let's say for the Brent, it's on the futures market, but like the naphtha and the PX, it's on the OTC market, then clear with the exchanges, for example, like the SGX and the CMEIs. I also give an example like the PTA and the PX spread, since this is the raw material and the end product. So when you trade this product, you can get a formula for the PTA CFR China price, you minus 0.565, then times the PX price. So you can trade between the so-called range for this, and you can see if the price is above the certain range, you can try to sell and buy the spread, then to do the arbitrage. So later on, I will give more examples. The next one, when we talk about not only the inter-commodity spread trading, also the calendar spread. For PTA, the most active months is Jan and the May. So here we just give, looking back for the 5 years, the trading chart. When we're watching the May and the January, the spread, you can see most of the time, especially in the 2020 and the 2021, the market most of the time is in the contango market. But in the 2018 and the 2017, the market actually is a deep back rotation market due to the supply. So we see if you want to create some of the trading strategy on the calendar spread, time spread, you can do either on the contango market or the back rotation market. So when you trade this spread, you also can, you see the lowest is the 150 and the highest is the fall around about almost achieve the 600. So the spread is between the 750. So it's a very wide spread. So the traders can get a profit from the buy and the sell the calendar spread. Next one is we have a PTA, the processing fee. So the red line is the PTA, the spot price. And when we add on the processing margin, it shows supposed to be based on the contango market can generate the forward price. So this is the one factor we also need to consider when we do the trading. The next is we call the basis spread. Means the spot minus the futures. We can read from this chart. Actually, the spot and the futures most of the time they go on the one direction. But sometimes the spread you can see the gray chart. Either they are on the contango or back market. So the spread, this spread also move based on the market conditions. So when a trader, when they trade market, they need to consider the first is the time spread, calendar spread, also the basis trading between the spot and the futures. So this is another trading strategy. So here, because of the time, I just give 2 examples for the trading. First is for the FDY factory, how they do the inventory hedging. This is the first one. Regarding the inventory hedging means sometimes the FDY is the end product of the PTA. So let's say in the market now have very high the inventory. So the factory, because currently they don't have the FDY futures. So PTA as a raw materials, so they can just hedge on the raw materials, means they can short the raw materials first. Then when the market go back to the normal level, they can buy back the futures to take the profit on the price movement. Meanwhile, they can avoid any the inventory, the value drop. So in this case, you see on the 20th March, the PTA, the futures price is 4,530 metric ton. And the FDI, the price is 9,625. So let's say because due to the very high the inventory, the stocks in the market, and the FDY factory worry about the price the FDY price will keep dropping. So what they can do is they will do a proxy hedging on the PTA price. So they just sell the PTA on the 12th March. And once the inventory rebalance on the 26th April, the PTA price, as their forecast, the market is really dropped to the 4,398. And their end product, the FDY, also dropped about 6%. So they can, their short position actually generate a profit. So their short hedge on the inventory value, they can get a profit to hedge their loss on the FDY stocks and inventories. Once the market conditions changes, then they can just close out this position, as we mentioned. So this is called the inventory hedging for the FDY factories. The next one I would like to share is the trading on the processing profit. So this scenario is, let's say it's a PTA producer. So on the February, the spot PTA price is 850, and this is CFR China, so it's in US dollar. And the PTA futures on the active months in May, the price is RMB 4,400, and the PTA processing fee is 230. So the PTA producer, they realize the price actually is the processing fee is very low. Even maybe they will make the loss. So what they can do is they trade on the 20th of March on the spot. They sell the spot PX. Sorry, this is a PX. So they sell the spot PX at 850 and buy the PTA at 4,400. And the 1 month later, when they see the price and the market supply demand have a rebalancing, what they do is they buy back the PX, the physical. Meanwhile, on the futures market, they will close out the PTA, the long position. So at that time, the PTA, the processing fee is improved to the 600 metric ton. So means the processing, they already have the profit. So in this whole scenario, when they do this processing profit, the trading are kind of the hedging, the final profit for them is the RMB almost around 5.64 million. So this is the two very simple examples for the PTA trading and hedging. Also in the market, China market, same as in the energy and the metal market, more and more people, the traders using the PTA futures as a pricing tools. From initially, China is pricing based on the spot price. After that, they change to the futures pricing. So we also expect in the future the overseas participant, when they export the PTA to China, they may use the PTA futures, the CZCE futures price as a pricing tools. So the formula will based on the futures price plus and minus the premium or the discount. So I think this will be a trend in the future, the PTA trading in the whole industry. Okay, this is my today's presentation. And Manat, we can continue to hand over to Zach for the next session.
Thank you, James, for your detailed illustration on PTA Futures strategy. And then let's invite Zach to give us the last talk today on price protection strategies on PTA. Welcome, Zach.
Okay. So Mona, can you guys hear me?
Yes, I can see your screen.
Okay. So hello everyone. Thank you for staying all the way till this last segment. I promise you will get a very good sharing on how to make your hedging even more exciting by using options. Okay, let's begin. So some quick disclaimer. Okay, now let's first look at the benefits of using options as a hedging tool. Okay, firstly, by using options as a hedge, not only it can help to protect your price risk by protecting it, it also allows some price participation if prices do move in your favor. Now, and second, with this function that option has, options allow you the flexibility to tweak your strategy over the course of your hedging time frame. So for example, in day one, when you enter an option position and few weeks down and you see that prices are moving in your favor, you may choose to add in different positions to tweak your hedge strategy. And of course, lastly, there are some short options when carefully executed and used correctly. It can also help to lower your inventory cost by receiving some premiums as well. So next up, I'll be bringing you through an example of a PTA consumer who uses options as a hedge. Over here, we have a consumer, ABC Factory, who requires up to 5,000 metric ton of PTA in February next year in 2022. And of course, they always want to stay competitive. So ABC Factory has to keep their material costs low. And looking at the price history, they are uncertain whether prices is going to continue to remain high or will it continue to fall. But they would still need to hedge the prices from going higher in order to keep their price and cost effective to stay competitive. Okay, so decided maybe they could use options as a price hedging protection strategy. So during then, at the time of execution, prices, right now was hovering at between 4,700 to 4,800. So they decided that 4,800 is a maximum cost that they are willing to take for the cargo. So then they executed a long call strategy with a strike price of 4,800, which expires in February. And this option transaction itself will cost them 100 RMB per metric ton in terms of option premiums that they will have to pay. Okay, so what is good about this option here is that, with this in place, even if the prices continue to trade upwards, they are able to keep their purchase cost at 4,800 per metric ton for this cargo. Okay, but so then what happens if prices actually fall? Okay, so let's look at it as well. In the same example, ABC Factory executing that 4,800 call option, and this time round, prices fall below 4,800. Okay, close to about slightly below 4,600 on expiry. So what can ABC Factory do, right? Because it's an option. So then they choose not to, since the market prices are actually in their favor right now, so it's dropped pretty low. They choose not to exercise the option, and then they will just proceed to buy PTA from the market at the current market price, which is much lower at the 4,800 strike that they entered into. So that way, they will still get to benefit that that difference and the low prices that the current market is trading at right now. But at this juncture, actually, most of you would be asking me, this RMB 100 per metric ton is actually quite high, quite costly for a hedge. So I've prepared another example that can help, lower the cost down much lower, while at the same time you also get the benefits of having an option. Okay, so from the previous example, ABC Factory execute that, long call at 4,800 strike, and having to pay the premium RMB 100 per metric ton. So now they worked out that, they are willing to give up a portion of their downside, okay? And they're able to accept a minimum cost at 4,400 RMB per metric ton. So what this means is that even if prices falls below 4,400, okay, they are willing to buy the cargo at 4,400 per metric ton even still. So with this in mind, they did another trade, which is actually to sell an option at this 4,400 strike price. And this is called the put option. Okay. And what this happens over here with the same expiry as well, so that they will expire on the same time, and they will receive a premium of 55 RMB per metric ton. So this brings down their total cost of option hedging down to only 45 RMB per metric ton. Okay, so as a factory being producers and all, the consumers to do all the processing, they have that margin. So this 45 RMB per metric ton is something that able to accept as a cost. So with this strategy wise, basically they are protected from prices going up against them, up above 4,800. So they are protected. So maximum cost is kept at 4,800. Okay, while at the same time, because of what they actually gave up, and any prices that falls below 4,400, they would have to buy cargoes and have it cost at 4,400 still. Okay, of course, all this is not inclusive of all the the transaction costs incurred for the hedging itself. Okay, so these will be the two examples that I've given. To conclude my presentation here, I prepared a summary for the best use cases for options hedging versus futures hedging. Right, so as mentioned earlier, futures entirely eliminates both upside and downside risks of price. Okay, while at the same time, on the other hand, options actually do help to mitigate your downside risk, gives you the price protection. But when the price moves in your favor, you actually get to participate in the upside gains, okay, unlimitlessly as well. But this flexibility of option actually comes with a cost. So for options, you will need to pay the additional option premium on top of the execution fees, right? While for futures, you just need to pay all the execution fees, which are your exchange fees, your brokerage commissions, and so forth. Now, as for margin requirements wise, options will actually require slightly lower margins. Okay, and of course, if you are looking at buying an option, you don't have to place any margins as well. You just need to pay the option premium that is required. So to conclude, when's the best time to use futures against or even options? So what I would say is that if you think that you're uncertain about the market, okay, and you think that right now the current price level, for example, the price was at 4,700, and you think that you're comfortable with that price being your cost, even for your future cargo that you want to hedge on, then you might as well just go using with futures as a hedge strategy, okay. But let's say, for example, if you do have a view on PTA prices, okay, then you could actually explore using option, okay, to actually get some gains if it moves as per what you think it will be, okay, while at the same time you actually do get that price protection that is built into it as well. Okay, so that concludes my presentation for today. So thank you for staying through this whole entire webinar. And please feel free to reach out to me or any of my colleagues at the contact details here. And last but not least, on behalf of the speakers and organizers, I would like to say a big thank you to everyone for attending this webinar today. Okay, back to you, Mona.
Thank you, Zach. I believe the examples you provided would be very much useful for both the producers and the consumers of PTA product. Okay, it seems we have running out of time, so I will select some questions for you to answer. First, this one is for Selman. You've mentioned that the overcapacity is here to stay in the whole chain and margins will be squeezed. Which product in this chain is likely to suffer the worst margins or losses in the near term? Simon, can you help address this question?
Thank you, Mona. Among the two main raw materials for polyesters are, of course, PTA and MEG. PTA being bigger than MEG in terms of absolute volumes. But the one that is coming under a lot of pressure, margins pressure, and actually making significant losses now is actually paraxylene. In absolute volumes and in proportion of volumes that are coming on stream, the amount of new paraxylene that can be produced and will likely be produced will far outstrip the consumption, the demand of it. And for PTA producers and MEG producers, especially PTA producers, they have shown that they are nimble enough to calibrate their utilization rates in order to keep margins at a certain level that is somewhat acceptable to themselves, especially in China, but also in many other parts of the world. So paraxylene is likely to be the one that will come under immense pressure in the next 1, 2, 3 years.
Okay, thank you. Thank you, Solomon. I hope this answers your question. And next one is for Kurt. Could you please talk about ZCE's plan and thoughts about introducing more products for overseas investors?
There will be some factor we consider about introducing more products to the international investor. And first one.
Kurt, can you speak up? I can't hear you.
Can you hear me?
Very vaguely.
Can you hear me? Can you hear me?
Yes, now very clearly.
My microphone has something wrong. Okay, here are some factors I think we will take into consideration when providing the international products. And one is the influence on the market, both about spot market and the future market. We must evaluate the effect and make sure it will not cause turbulence in the market's price. And also another factor is the import and export volume. About China, we wish to provide the products that can also help the industry in global market to provide a useful tool and for them to hedge the risk in their commercial trade. So based on that, we have several discussions about the products we might introduce to the global market, like the polyester staple fiber, the soda ash in agriculturals, and also the rapeseed oil, rapeseed meal in the agriculturals. They meet some principle in some extent and might be the potential products that we can introduce to the overseas investor. But I think the process will be very prudent and we need to do more research and preparation. So for now, we don't have any precise timetable and plan for products, but we hope more products will be tradable in global market as soon as possible. Thank you.
Thank you. And our next question is for Zach. Where can I trade PTA options and are they traded electronically?
Okay, so in terms of PTA options, it's different from PTA futures right now that is actually internationalized. So PTA options are currently not internationalized, so meaning to say the international traders won't be able to have access to them. But however, if for those that are already based in China, or perhaps you have a Chinese entity, you could also just proceed directly to ZCE to get that get your account open with the brokers and get it traded. And I believe it should be able to trade them electronically onshore. But of course, if you do and any of you need any help in terms of getting guidance on that, please feel free to come to us or the ZCE members as well.
Okay, thank you. Seems we don't have any more questions and we have already run out of time. So I would like to, here, let me share my end screen. Okay, so I would like to thank all our guests for joining and for your valuable input. Also thank all the audience for listening. Hope this webinar is useful to you. If you have any questions, comments, or need further discussion, please contact us by the contact information on the screen. Thank you all again. Stay healthy and safe and have a great weekend ahead. See you next time.